Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And this is a special edition technical analysis commentary for today, the 6th of April 2025 on the E-mini S&P futures. The commentary is a follow-on to my earlier video commentary made on the 7th of March this year and a supplementary one to the more recent video made on the 4th of April. So why have I decided to make this supplementary video so soon after the earlier one? Well, I think the reason is fairly obvious. The strength and depth of the fall has prompted me to make this video commentary and to see what next will be on the horizon. So let's look at the daily chart. Now, as I said in my earlier video commentary, and I quote, "Look at the whole mid-February to date action as a bearish half hesitation, with a potential target X in the 5200 zone below," end of quote. And I actually continued, and I quote, "I'm minded to think that perhaps we may move down to the next significant 50% Fibonacci line below, the one for the October 23 to February 25 move at 5145. This is not verified, but if we do travel as far as 5000, it would seem reasonable to push that little bit lower. The question is, how do we get there? For this, I was initially tempted to utilize an acute bearish Andrews pitchfork for the February to March action. However, I've been minded to temper that into what we may now, at that time, had on my daily chart a shallower dark blue bearish shift pitchfork to show the bearish angle of attack. This is still a nascent pattern, so I may finesse it further, or retire it completely if I thought it appropriate. But for now, I'll suggest watching and utilizing this bearish pattern," end of quote. Well, as you can see, my natural conservativeness in pattern application did not suit this market, and prices punched down through target X at 5200 and also the 50% Fibonacci line at 5145, closing below both in one session. However, if you applied the previously mentioned acutely bearish Andrews pitchfork, the one I thought was too bearish, if you apply that on the daily chart, which is highlighted in bright red, you can see that prices, whilst penetrating the lower time, currently at 50.88, closed right on it, thus justifying it as an appropriate to show the bearish angle of attack for this market, even if the bright red lower time was breached. Now, it was breached, but it closed right on it. So what's next? Well, apart from the obvious of trying to maintain prices, especially on a closing basis below the 50% Fibonacci line at 5145, the way lower is in threes. 3 uptrends to look at and 3 50% Fibonacci lines to also watch, as well as congestion zones. I'll deal with the congestion zones first. They are at 4903, 4808 to 4834, 4739, 4672 to 4700, 4631 to 4641, and 4520. Some of these contain 50% Fibonacci lines, and the 3 to watch out for are the October 2022 to February 2025 50% Fibonacci line at 4834, the October 20 to February 25 move, the 50% line at 4682, and the one that does not show up on my daily chart and is probably the most important for all those anywhere nearby. It is the key 50% Fibonacci line of the March 20 to February 25 move at 4170. This last one is a just in case scenario one. Now onto the uptrends. And we have nearby the purple October 2022 today uptrend, currently at 4976. The bright green March 23 today uptrend, currently at 4831. And the key March 2020 today uptrend, currently at 4777. This last one is, I say, a key uptrend, and the one to watch should the market start approaching it. Now, this deals with all the downside. Let's just look at the top side as well, as it would not be unreasonable to see a reactionary move up at some point. And here the 50% Fibonacci line overhead up at 5145 comes into play again. as does to a lesser degree the broken dark blue lower tine, currently at 52.77, of the original bearish shift pitchfork. However, to my mind, the key topside features to watch are the bright overhead middle tine, currently at 53.55, plus of course the March 2025 low areas around 55.50, and finally the 50% Fibonacci line of the whole move down since the March move, the March peak in the first place, currently at 56.19. Now you may ask, why do I feature these topside levels in what is obviously a bear market? Well, in my experience, such bear markets do leave some traps behind, especially when they recover, which they invariably do at some point. Though it may be a way away, so it is best to be prepared for them just in case. Finally, I will leave you with a couple of big pattern thoughts which may show the recent action itself is only part of a bigger, and I mean a much bigger pattern. For this, I'd look to the longer term monthly charts. The question here is whether the at least 2023 today action and possibly the 2022 today action are part of a bump and run reversal top and or part of an ascending inverted scallop pattern. The first pattern, as the name implies, usually seen as bearish, but the second does have the possibility to see prices revert higher. It is too early to tell on these right now, as after all we have not even completed the action for April, but it may be something that I will need to discuss at some future date and time. Thank you for watching and listening. This special edition supplementary broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final bit.